Alright, welcome to the video episode 2 on reading candlesticks and session times. So, reading candlesticks, pretty simple. Here we go. So, if I could find where I put it. Okay, here we go. And so, let me put this boohickey. Okay, so bullish candle is the blue, bearish candle is black. Which bullish is up, bearish is down, and what you're familiar with is basically green, which is now blue, and what you're familiar with for the down candle is red, but it's now black, which is what I'm teaching. So you'll see that each of these candles has a body. Okay, these bodies are the bold part of it filled in. You'll see this big part from here to here is blue, and then from here to here is black, and that's just called the body. And then these little skinny parts of it going from the top to the body, and then from the bottom of the body to the bottom is called candlesticks, and I'll explain what those are. So the top of the candlestick will always be the high. Here we go, and the high. And the bottom of the candlestick over here will always be the low, as you can see here. And so for a bullish candle, this is based on like a 1-day candle. Okay, so the bottom of a bullish candle, meaning it went up, is the open. So what price opened at for the day. So let's say this is something like April 24th or something. So that means the day started at this price, whatever, okay? Let's just say 1,000, right? And then top of the body means it closed at whatever, let's just say 1,200, okay? So it closed up here, and the high just means it went up, but it also went back down. It didn't close right there, and I'll show a little bit more of an example of that in a second. And same thing for the bearish, but just different. It opened at the top of the body and it closed at the bottom of the body. And then the low is just it went down and then came back up. Okay, and so I have an example for this. Let's see if I have it on one of these charts. Okay, let's see. 30-minute should be here. Okay, here we go. So if we look right here, whoops. All right, if we look right here, then we can see, I want you to focus on this particular one right here. Okay, you can see it has this is top of the candle, top of the body, bottom of the body, low of the candle. Okay, the candlesticks, right? So high, low, open at the bottom of the body, and close at the top of the body. And so we will go down and I will show you what I mean. Okay, so that was the day. That was on the day time frame. So that means it opened. Let me see, go back. Where did we go? Okay, that means we opened the day right here at 5111 and then closed at 5155, just about there. And you'll see on the right side where the price is on what I'm highlighting. And so what we're looking at here, so that candle, so that was for the day, okay? And this is the 30-minute. So each one of these candles are based on 30-minute, and what I just showed was a candle based on 1 day of movement. Each candle here is based on 30 minutes of movement. So this is just what I have highlighted here in this box was that whole candle. And now that we've zoomed in, we can see the movement of the price during that day. So you can see we opened at this about 5111 level, and then we went down, which is what formed the low, and then we went back up. See this right here? This is the high, okay? And then we went back down, went up again, and we closed right here. And that's what had the close. Okay, now I'm going to show an example for a bearish candle. Okay, so right here. Let me delete this nonsense. Okay, so this black candle, bearish candle down. So we have the high right here, top of that wick, and then open here, top of the body. Like I said, it's different. It's the same thing as the bullish one, just opposite for the open and close. So opened up here, came down, we closed right here, and we also have the low right here. So I have this highlighted. This is based on the 1 day. So this low candle here shows the day. go down to the 30-minute candles, and this is what I had highlighted. This is what we were just looking at. So we opened right here, we came down, this is the low, this is that wick I was telling you about, came back up, we also have the high, so you can see that that's where that wick was, and then when the day ended, price was right here, and that's the close. When day started, it was up here, when day ended, it was right here. And we went up and down in between from the day start to the day end, which is what forms the highs and lows. And some days you're not going to see wicks at all on any candles. That just means that it had just basically dumped in one direction or pumped in one direction, and it started at the high of the day, or it started at the low of the day, something like that. And so, like if, for example, if price never ever went up here, like let's just say it went right here and came back down, you would not see, because price didn't go up there, so why would there be a wick on the day candle? So that's that. And so basically how you want to read candles, like let's say 1 hour chart, let's look at this one. Okay, this is a great one. So look at this black candle right here. This means we opened right here, we had the high right here, and we dumped. Okay, we closed right here at 50.95. You can see on the right side that price movement, 50.95, and we closed right there. That's why there's no bottom wick. We just closed at the lowest part of the hour. Okay, we closed the hour at the lowest part. And so same thing with this bullish candle. We have a little bit of a wick here, so we didn't go down that much. And then, like I said, this is based on 1 hour movement. And then it goes for the same thing. You know, you can scale down to the 5-minute chart, and this is what you're going to be looking at. So essentially that's it. I'll go more in detail when we actually get to actually analyzing the charts, but that's pretty much all you need to know right now. And so session times, what I'm going to be teaching is strategies that you can't trade like every single second of the day. There's certain times that is the most probable that you will win the trade and what you want to be trading. Okay, you don't want to be looking at the charts for 13 hours out of the day. What I actually like is only being on there for maybe 2 hours, and that's it. So if you go to babypips.com, look up Forex market hours, that's essentially what the trading hours are. Okay, these are the sessions, and so you can look at that. Sydney session, I kind of just ignore that because there's no reason to look at it. And then there's Tokyo, which is Asian session, London session, New York session, right? And if you set to your time, whatever you want it to be, then you can see what times they open. Okay, so let me see here. So like Chicago time, we'll see New York opens at 7 a.m. for Chicago. Okay, and so I have, if you go up here, this is an indicator, right? You can search in the indicators tab, Lux Algo sessions. It's right there. This is what I have on. You can see at the bottom, red is for Asian session, blue is for London, and orange is for New York. And that's what I look at. You can go at stop, and this is stop the video. This is what my settings are. And so all this is based on this time zone, London time zone. Okay, it's not gonna be the same as me if you have it on your time zone. So if you want to, you can mark it out based on what these are, but same thing as me. Here we go, London, switch your time to London and put your settings like that. And so basically the best times to trade is what I found to be, is what I'm going to be teaching, is the first 1 hour or 2 hours of London session. So from, you can see, look at the bottom, Friday 10th of May from 8 a.m., which is 8 a.m. in London, to 10 a.m. Okay, if a setup doesn't form in that, then I don't worry about it, because some setups might form later, like 4 hours into the session, and they won't hit because this is price movement. Okay, it's just what the best setups are, the ones that are formed early in the session. Okay, so New York, same thing, except from, there's different times to trade. So for Forex, you can trade that. What I like to trade is Forex from 7 a.m., which is Central Time, which is 13 in London, 1 p.m. The first 3 hours, okay, for Forex, okay. And so for NASDAQ and S&P, the stocks, you want to wait, or what I like to do is, what I'm going to be teaching is to wait until you might find a setup early on, which is what you will find, but the best is what I do is I wait for the stock market to open. Now pre-market opens at 1 p.m. in London, right? But an hour and a half after is when the stock market opens, and you'll see opportunities and trade entries show up, and that's the most probable times, and I will only trade that for the first hour and a half after the market open, and anything after that I do not take. So an Asian session usually consolidates, which means price, you don't really get a setup. You can see right here, it just kind of barely moves up and down a little bit, up a little bit. London, insane expansion and movement. London's a bit like London here, starting at the blue line, up a lot of movement. New York session, up a lot, down a lot. Asian session, we can just consolidate. You can look at another example here, and this is Asian session, kind of just nothing really insane. You're not going to find much of an entry in there. Some trading models you might, but I personally don't. Try to find one. And so that's pretty much all there is for this video, and have a good day.